Joining me now is Craig Parry from IsoEnergy. Craig, welcome back. You know, it's been a few weeks since I last saw you in Vancouver, and you have some new results in. What are they telling us?
We do, Stu, yes, very exciting results. We knew that they might be pretty good based on the scintillometer results that we had. We didn't think that they'd be this good. They're truly spectacular. You know, 8.5 metres at 3.9% U3O8. That included a 5 metre section at 57% uranium, so astonishingly high grades.
Wow, okay. Yeah. So what does that do for you right at this moment as we take a look at the landscape that's ahead of us? Because one of the other elements that has changed a little bit since we last talked is we now know for sure that Donald Trump wants to build this uranium reserve in the United States, and so it starts to change the market a little bit.
Yeah, look, it does. So of course, those results mean for us, and you know, we're very much focused internally at the moment because the uranium market's still challenged. We know it's coming, but we're not worrying about too much about that. We'll stick to our knitting and keep drilling out this wonderful deposit that we've now got. But those results, you know, confirm Hurricane as one of these very high-grade, true unconformity-related Athabasca deposits. So, you know, that brings with it all the great potential that you have there. So, you know, we'll focus now drilling out that resource, drilling out that deposit. I'd like to think that sometime next year, midway through next year, perhaps we'll have an initial resource on the deposit. A lot of work to do to get to that point because we haven't closed it off on any dimension yet. So still a lot of drilling to come. And then in the context of what's going on in the broader market, look, you know, we continue to be very challenged in the uranium space. I suppose we you know, it's not, I'm happy to say to investors, it's not too late to get on board the ISO train. There's more to come. I think our share price this past week, since we put out those results, finished flat. In a normal market, it would
Despite the fact that you had such positive results, share price stayed flat.
Share price stayed flat. It was up about 35% there on the day that we released it. But of course, we hit these horrible headwinds around you know, what's going on with coronavirus and the market here. So we ended up the week flat. I think, you know, the competition, typically most uranium stocks were down 30 or 40% on the week. So, you know, that's the benefit of having that discovery there for our share price. But, you know, we'll just keep sitting there, drilling that deposit out as we go. And as you rightly say, there's some other things going on in the market in the background, on the macro picture that look very favourable for us with Trump. You know, wanting to establish his strategic uranium reserve. And there's a few other things happening there at the moment as well that we think are pretty positive signals.
So right now, as I understand it, the global consumption is about 180 million tons annually, with production being about half of that. Is that correct?
That's right, 180 million pounds. And
pounds,
exactly. And production's a little bit over half of that, we think at the moment. So
now there's a surplus, of course, but we're eating away at that surplus. And if you add in what Trump is wanting to do, that starts to change the equation a bit.
Totally, that's right. So his plans there will further draw down on those inventories that we think are out there that have affected this market. Look, we do hear, you know, I think Cameco have indicated that they'll be buying strongly in the spot market come the second quarter. They're rolling over contracts now and writing new contracts. And this is something that's been a little bit missed by a lot of the pundits out there and the consulting groups like UXC that look at this. UXC have a long-term price forecast in their current long-term price at $32 a pound. It's erroneous in the sense that Cameco have said that they've recently written contracts, and they won't tell you what price they are. It's all commercial in confidence, of course. But they're suggesting that those contracts are certainly north of $40 a pound. So the true long-term long-term price of uranium today is somewhere north of $40 a pound. And yet here we are with this, you know, spot price at $25 a pound. It's a noisy but largely irrelevant data point.
Well, and that's also looking at the uranium end-use market is going to stay relatively stable, but there is every indication that that's going to change. That there's a wide variety of issues that are coming on you know, the small modular reactors, for instance. They are going to need supply, and once we start to bring those into the marketplace, will not then the demand increase?
Look, I think certainly in the medium term, absolutely looks very, very positive. I think when we spoke there a a month or so ago at VRIC, we talked about the fact that, like so much metal demand in the world, it's very much a China and Asia story, albeit that Russia is building 26 new reactors as we speak. Right. China's commissioning a new reactor every 8 weeks. I think, with coronavirus around, that might slow down a little bit, but the trajectory is there. Yeah. The Middle East, Saudi Arabia is now looking at building reactors. India's given the go-ahead for a massive new reactor. So that demand side looks absolutely fantastic over the medium term. And I think, all we're waiting for is those reserves that are out there, and we think they're getting very sort of small now. Right. And as soon as they're worked through, you could see the uranium price really spike up hard. I would not be surprised. The sort of elastic band continues to get stretched all the time. Yeah. And Cameco, holding off their purchases in the spot market stretches that a bit further. But I think now, and it's partly a story about purchasing manager complacency at those big utilities, guys like Exelon. They've had all the product that they've needed for the past 4 or 5 years, and it's come to them very readily. I think that that's getting tight now. They don't realise how tight that market might be, or that those reserves are. So as soon as they're worked out, I wouldn't be surprised if you see the uranium price spike, and it could do another 2007. We may see $150, $200 uranium in the next couple of years. So we won't hold our breath, and we're doing all the right things internally and corporately. We've got the most exciting new uranium discovery for many years since our parent company discovered the Arrow deposit. So we'll stick to that. We're in good shape, and it's going well.
So not everybody will have seen our previous interviews, and so they're going to go, hang on a second, this sounds interesting. Who is IsoEnergy anyways, and where is your property?
Sure, so we're in the eastern Athabasca. We're a spin out of NextGen Energy. So we're Lee Courier, our chairman, myself and Chris McFadden, and Andy Brown started NextGen back in 2011. We raised some money to do some exploration work in the Athabasca. We discovered the Arrow deposit, so that's allowed us to turn NextGen into a $500 million company, and there at NextGen we're building the world's biggest uranium mine over the next 3 or 4 years. And we spun out some other assets in the eastern Athabasca that weren't getting love and attention because we thought there was some good promise there. We acquired a portfolio of other projects over the last couple of years, and we made that Hurricane discovery back last year. Yeah.
So, and just for anybody who doesn't know where the Athabasca region is, let's give them a sense of what that jurisdiction is, actual physical location, and why that's important as we move forward in the uranium marketplace.
Sure. So the Athabasca Basin, of course, is really what Saudi Arabia is to oil. The Athabasca is to uranium. It's in Saskatchewan, northern Saskatchewan. Saskatchewan as a mining jurisdiction typically comes in first or second on that Fraser Institute of Mining Executive survey, so it's a great place to operate.
Great legal jurisdiction, great mining community, great infrastructure, everything. Right?
Exactly, it ticks all the boxes, and of course, out in the eastern side there's a number of uranium mills, huge amount of infrastructure, including human resources as well. So when you want to build a uranium project, that's the best place on the planet to do it. And of course, it's the home of the highest grade deposits on the planet.
So it's looking positive.
It's looking pretty positive. Yeah, look, when you start these things, exploration, there's always sort of a lot of risk involved. And I think given the team, given where we are, our chances of success were better than they otherwise might be. But
especially with the latest results that you have, which are confirming and de-risking the project.
Exactly. No, there's some spectacular numbers.
Yeah.
We're very fortunate. We're very excited about that project. We've got 2 rigs on the ground as we speak. Yeah. We'll wrap up this current drill program over the next couple of weeks, and you'll see a lot more news flow from us over those couple of weeks.
So stay tuned.
Stay tuned. Suffice to say, we're drilling in and around some of those high-grade hits. So, we'll see what comes. But we're pretty excited about it.
So you're going to come back again and give us an update when we move further and further towards a market realization that allows you to take your next step.
Yeah, and look, it's funny. We saw this at NextGen. We made that Arrow discovery in about 2013. it took the market 6 to 12 months to really appreciate what we had.
Yeah.
You know, the share price went up, started to go pretty dramatically, 60, 80 cents. It wasn't until we put out that first resource, and it very quickly went from 80 cents to about $2.60. So we're not far off that stage here. People are just getting their head around it. We only put those results out Tuesday last week, so the market's only had a week to digest it, because we've put it out in the worst market, or the worst week for the market in the last 5 years, which is just my luck. But I think people are coming to appreciate it.
Yeah.
We've had some very good meetings here at the PDAC. People are looking at it. We've got eyeballs on us, and people want to invest. So we're well set up.
Great. Well, thanks for coming in and sharing this, and I'm looking forward to our next interview, okay?
Stu, absolutely. Always a real pleasure. Thank you.
And likewise. See you again.